having this conversation today is as a result of the fact that, I mean, as a church, right, as the body of Christ, we also have to be intentional to ensure that, we are not ignorant of the law of the land, right? And as a result of that, it's important that we do our best to ensure that, everyone who is a member of the tribe is also well acquainted with what is expected within the context of the Nigerian law and how that it impacts each and every one of us. And we have not just hurriedly put this together. We're really, really grateful that we have someone whose specialty, like you would have seen in the flyer, is majorly based on this, and she'll be joining us in a few minutes to walk us through all of this. We would remember that earlier in 2025, we had a session with Pastor Yinka, and she took us through. Oh, I think that yeah oh yeah, that was the meeting, the bamboos and the pillars, where Pastor Yinka took us through personal finance and how to, be better with our finance. And this evening we're having, um, you know, we're having a professional who is in the tribe, and not just any professional at that, honestly. And she'll be walking us through what these tax reforms are, how they impact our lives, and what to expect, and much more than that, what is expected of us. Remember, Jesus speaking, he did say, "Give to Caesar what is Caesar." Right? You may not like Caesar, you may not agree with Caesar, but you give to Caesar what is his, right? And trust God for increase. And that's how we we deploy in the kingdom. Because regardless of whatever our commitments in the community is, our commitment towards the kingdom, only grows. And it's important that we pay very, very rapt attention, and we do not just take this meeting casually, right? It is very, very important that we pay attention because our very lives literally depend on it, right? The Bible did say you pray for the peace of Jerusalem because you are a part of Jerusalem, right? And in this context, it is important that we are very well acquainted with what is expected within the Nigerian context as regards the tax reform. So before we bring up Olaoluwa Ogunseiju, it's important, again, I'm trying to just reinforce this so that we pay attention, right? A lot of people have heard so many things over the last 3, 4, 5 months. Oh, they will deduct this, they will do that. Please, at this point, like I said earlier, we have a professional who does this at a corporate level, who does this on, at 9 to 5, right? She's a senior tax practitioner with respect to Nigeria, and all the more reason why we have to pay attention. Sorry, my headset's broken. All the more reason why we have to pay attention. And it's only going to be for our own good, right? Please, for as many of us who have questions, the chat box is open. Let's type in our questions in the chat box. We would have the session first, and after the session, our facilitator would proceed to, take our questions and answer them. And I would imagine that during the course of the session as well, she's able to answer a number of the questions that are already been, that have already been asked. So please and please, if you have questions even right now, please go ahead to the chat box and drop your chat, and that would help. All right. So let's ensure that we ask all our questions as best as we can. All right. So once again, you have a question, gently get into the chat box and drop your chat and drop the question in the chat box. And the facilitator would try her possible best to ensure that every question is answered, as that is the plan for tonight. All right. So join me as I welcome, our facilitator for tonight, Miss Olaoluwa Ogunseiju, aka Lawizi. Good to have you.
Good evening. Good
Good
evening,
evening.
Director Gabriel. Good
Yes,
evening, everyone.
ma'am.
All right. So we've heard what Director Gabriel said. We already know the ground rules. So please let's drop all our questions in the chat box. Also, I just want to say this, right? Let's not approach this with a defensive mindset. Let's open our hearts to learn and understand what the law is about first before we draw conclusions. Okay, so I am going to share my screen. Please confirm if you can see it. Okay. Okay. Can we see my screen? Can I get a confirmation, please? All right. Okay, so welcome again. This is just going to be a short summary of what the new tax law is about. I'm just going to run through the slides. I hope I cover our questions during the course of the presentation. Then if we have other questions, we can go ahead and ask after the presentation. Right. So first things first. Right, just as Director Gabriel already laid the ground rule, paying taxes is actually something God also wants us to do. I get that there's a lot of Nigeria is not doing this, Nigeria is not doing that. But it's our civic right and responsibility to actually pay taxes. And as we can see in Matthew 22, it says, give to Caesar what is Caesar's. Caesar, in this case, being Nigeria, right? And, give to God the things that are God. So the same way we pay our tithes in church, we give our offering in church, we also suppose, as children of God, we're supposed to pay our taxes. Same with ESV. I know we can read it here. So please let's approach this as children of God, right? So I'm going to talk about how the new tax law affects personal income taxes. That's the taxes individual pays. And I'm also going to talk about how it affects companies. So, if you run a business, you'd also know what to look out for and what changes you're supposed to make in your business. All right, so the tax law, we have 4 new tax laws, right? We have the Nigerian Tax Act, we have the Nigerian Tax Administration Act, we have the Nigeria Revenue Service Establishment Act, and we have the Joint Revenue Board Establishment Act. So the NTA, that's the Nigerian Tax Act, really, what it did was to take several laws we have together and put it together in one comprehensive law. And also in this way, changing some things, streamlining some things, broadening some things, and yeah, really pretty much just making changes. And I think another thing I want you to know is when this law was made, when the NTA was being put together, it was not just what's the name of this guy that heads the committee? Oladele, Taiwo Oyedele. It wasn't just Taiwo Oyedele that sat there and just thought about these things. There are professionals from different sects, different industries that came together to put together these laws. And when it was brought forward, it was sent to different countries to proofread, different companies to proofread, to look for, areas that don't make sense, that could affect people negatively. Feedbacks were taken, it was revised, It was sent out again for second screening. Feedbacks were taken, it was revised. And we also know that year in, year out, we get the Finance Act, which repeals and updates different aspects of these acts that might really have more negative impact on individuals than positive. So that's another thing to put in mind. All right, so the NTA repeals quite a number of acts and also introduced some new ones, right? So prior to now, we had the Personal Income Tax Act that governs the individual employment tax. We had the company income tax that governs the company taxes. We had the capital gains tax, amongst others. But now everything has been put together to, to create this comprehensive act as the NTA. The NTA pretty much governs the administration part for collection, remittance of taxes, and all that. The NRSA establishes the Nigerian Revenue Service. So prior to now, well, I don't know if it's common knowledge, but the agency that governs taxes for companies, the Federal Inland Revenue Service, the FIRS. Now the FIRS has been taken out and the Nigerian Revenue Service has been created. So we're no longer going to have the FIRS, we're now going to have the NRS. And then the Joint Revenue Board Establishment Act. This brings something very important that we need to pay attention to. Introduces the tax on board. So the tax ombudsman, an ombudsman, is someone that, so how do I explain it? So prior to now, right? If you say the tax authority sends you a letter that you're defaulting, if you don't respond, they can take you to court, right? And we had lawyers and people that were advocating for the company against the taxpayer. So they come to court, they pretty much charge you to court and fight it out in court. But now we have the tax ombudsman. This is like an advocate, but for the taxpayer. So if you have something pending with the tax authority, you have a demand notice that is just going on and on, you're trying to object to it, the tax authority is not the tax authority is not doing anything, you can approach the tax ombudsman. So they would stand like your lawyer and help you to defend your case against the tax authority. So that's something really, really good that was introduced with the new tax law. So we can, something we are encouraged to take advantage of it. And it comes to effect January 1st, 2026. So all these laws come to effect January 2026. All right. So why do we need these reforms? Before we had low tax to GDP ratio. That was something that was done to this new reform was done to bridge that. We had different taxes, as I mentioned before. It has now been consolidated into one. Ambiguity in the laws. Before, if you read tax law, it was written like KJV, right? It's not something that you can easily understand, but now it's written in a plainer language, something that the layman can pick up and understand and, just move on with it. Then complex tax compliance process. There are some, prior to now, you had to pay CGT on something and then pay this other tax on another thing. Now it's been streamlined, and we'll see that later on. And this tax also removed obsolete provisions. So these are tax laws there, even though it's been updated over the years, but we still had a lot of provisions that made sense years back when they brought it to law. So the NTA helps to remove that. It also pushes for digitization of tax processes, ease of doing business, a coordinated collection system, amongst others. Yeah. Okay, so for the personal income tax, prior to now, one of the main criteria for knowing if you're a tax resident in a country. Okay, so maybe let me explain what tax residency means. You can travel to a particular country but it doesn't mean your income is taxable in that country. If your income is taxable in Nigeria, you're tax resident in Nigeria. So you can be resident in the company, really doesn't mean you are tax resident in that country. So prior to now, residency was one of the main criteria you had to meet for you to be tax resident in a place. However, it was not written in black and white. It was pretty much inferred, right? But now it's been written in black and white. There's no ambiguity. It's clear as day. For you to know if you're tax resident in Nigeria, one, if you are domiciled in Nigeria. So just to summarize these 4 things, right? If you are a citizen of Nigeria, you're tax resident in Nigeria. That's the first thing the NTA brought in. Then if you, how you know if you're a resident in Nigeria, if you're a citizen, if you're in Nigeria for 183 days within a calendar period. So 183 days is roughly 6 months. So if you're in the country within that period, if you are abroad, but you have your wife and children in Nigeria, you have significant ties to Nigeria, you're tax resident in Nigeria. If you have an habitual place of abode, so this is not just if you have a house in Nigeria, like your personal house in Nigeria. It's not limited to that. If you have an Airbnb that if you come to Nigeria today, the Airbnb would be made available for your use. Yeah, you have a place of habitual abode. So that also brings you into the tax net. So just to make this more balanced, right? Saying you are in tax net doesn't automatically mean that you have to pay taxes in Nigeria. So if I can just break it down, if you are in Nigeria, you are in Nigeria, you earn your income from Nigeria. So your income is only or partially performed in Nigeria. And yeah, your company is based in Nigeria, you would pay taxes in Nigeria 100%. Nigeria's first taxing right. But if you are outside the country, even though you have significant economic ties to Nigeria, right? And say your outside Nigeria, and in that case, let's say, for example, you're in the UK. So in that case, United States has the first taxing right. You're not going to, you're going to have the taxes paid abroad as a credit against the tax you're going to pay in Nigeria. So let me explain it further. So let's say converted to Naira, right? You made 50 million Naira from the UK. And then you've been taxed in the UK. The amount, say you were taxed, say 10 million Naira, equivalent of 10 million Naira in the UK. Then that 50 million will be subjected to taxes in Nigeria. If what you paid in the UK is higher than what you paid in Nigeria, then you would not have to pay taxes. So it's going to be used as a credit against what you have to pay in Nigeria. That's the sense behind it. Prior to now, right, in the former tax, so that's the Personal Income Tax Act, you could only claim this if the country you are in has a double tax agreement with Nigeria. But now that has been removed. Regardless of if the country has or does not have a double tax agreement, a DTA with Nigeria, you would still be able to claim that credit in Nigeria. Now, this might not be the same with the other country if the situation is reversed. So you'd have to consult someone over there to understand how things will be run there. I hope that's clear. And there's a lot of technical words, but let's just try and keep up with it. Okay, so the flip side of this is that if you're in a country like the UAE, where they have zero taxes, so you're not paying taxes there, you are going to pay taxes in Nigeria. So the NTA helps to fully curb double taxation, but it also helps to prevent double non-taxation. So if you're not paying taxes there, you'll pay tax here. So, yeah. All right. Also, for people who are on diplomatic assignments abroad, they don't have to pay, they would not pay taxes in the country where they're sent to. So for, say you're an ambassador to Greece, you're not going to pay taxes in Greece, you're going to pay taxes in Nigeria because, yeah, you're in Greece, but you're a Nigerian employee. So that's pretty much straightforward. Okay, chargeable income. And we're going to define chargeable income in the next slide. So I just want to speak about the different incomes that are subjected to taxes in Nigeria. So prior to now, it's pretty much straightforward, right? Your salaries, your wages, benefits in kind. Benefits in kind are non-cash allowances given to employees. So if your company buys a car for you, you're going to pay taxes on it. So this is not a new development. Even under the previous law, you'd also pay taxes on it. So that's not something new. So we have dividends, even though the final tax on dividends is withholding, so it will be subjected to a type of tax, right? Interest, rent, royalties, amongst others. But the new income, set of income that would now be subjected to taxes. So these are income that were previously not subjected to taxes under PITA, that's the Personal Income Tax Act, that would now be subjected to taxes under NTA. So we have gains from virtual assets. So guys that are into NFTs, cryptocurrencies, Bet Niger, amongst others, gains from that. So we need to understand that it's gains from that. If you buy crypto worth 50,000 naira, and then you sell the crypto and you sell it for 60,000 naira, it is just the 10,000 in profit that would be subjected to tax. So it's gains, not the full tax. So please, let's put that in mind. It's the gains from these things that are subjected to taxes. So honoraria, if you go out, if you have a speaking engagement and they give you honoraria, even if they give you in cash, it will be subjected to taxes. So one of the questions I used to hear is, if they pay me in cash, how would the government know they pay me in cash? You need to know that for every debit, there's a corresponding credit. So for every inflow that you get, the money is coming from somewhere. It's removed from someone's account. The person is going to account for it in their books of account, right? So yeah, the government will know either which way. So exemptions, we have minimum wage. Everyone who earns minimum wage are not going to pay personal income taxes in Nigeria. Even if the government comes to there and says we're increasing minimum wage to 50 million, they would not pay taxes. Federal, state, government bonds, there are no taxes deducted from that. Compensation for loss of office. So this is different. Say because of change in technology or some things, right? Some people were made redundant, and as such, the company has to lay them off. Prior to now, an excess of 10 million will be subjected to capital gains tax. So what I mean by excess is if they pay you 11 million, 10 million is tax-free, 1 million will be subjected to capital gains tax. However, the NT has increased it. It is now an excess of 50 million. So if they pay you that same 11 million come January, it will be fully exempt from taxes. If they pay you 51 million, 50 million would not be subjected to taxes. 1 million will, however, no longer be subjected to capital gains tax. It would now be subjected to personal income tax. So it will be brought into the payroll, taxes will be calculated on it, and yeah, that's it. Pension and retirement benefits. So your pension, contributory pension, for people who go the extra mile and have what's it called, voluntary pension, that would also not be subjected to taxes. Dividends. So dividends would not be subjected to personal income taxes. And that's because the withholding deducted on it would serve as the final taxes. So it will not be subjected to personal income taxes. And then for gratuities, as long as the payment is named gratuity, as long as the payment is in the company's policy as gratuity and is paid to you as gratuity, there's no tax on it. So it's fully exempt. So now, your full tax, your full income is not going to be subjected to taxes. So if you earn, say, 2 million per month, the full 2 million is not what we calculate taxes on. So what we calculate taxes on is your chargeable income, and that's your income less reliefs. So there are different types of reliefs, right? So I would start with the new one, which is the rent relief. Come January 2026, there's a new relief you are entitled to. That's the rental relief, and it's the lower of 500,000 or 20% of your rent. So if you pay 2.5 million, okay, so don't let me use, so 20% of 2.5 million really is 500,000. So anyone who pays 2.5 million and above for rent would be able to claim the full rental income. So if you pay 2 million, 20% of 2 million, that's 400,000. If I am correct, yeah, it should be 400,000. 400,000 is not up to 500,000, so you claim 400,000. You would not be able to claim the full rent relief. However, if your rent is 3 million, 4 million, 20% of those amounts is higher than 2.5, is higher than 500,000. So it would be limited to 500,000. So here is what you're supposed to do. If you're three living in a room, in a house, right, you can reach out to your landlord to help split your rent receipt into 3, because your name has to be on it. So now the law doesn't say rent receipts. The law actually says evidence of rent payment. So it can be transfer made to your landlord, it can be your rental receipt, right? Just an evidence showing that you pay taxes. So you can do that, right? If you're married, you're staying with your husband, you can also decide to split it, amongst other things. Then we also have some other reliefs. We have NHIS, that's National Health Insurance Scheme. I know most companies nowadays, they bear 100% of the HMO, so the NHIS, the HMO, then same family, right? So they pay 100%. You would not get relief for that. But if you are made to pay a portion of the amount, it's a claimable relief. Pension contribution, both contributory pension, that's the statutory one, and the voluntary pension, the one you decide to add to it. The portion that is deducted from your salary is a relief. The National Housing Funds, I know that when the Business Facilitation Act came out some years ago, it made NHF voluntary for people in private practices, right? So if you're still contributing to this, then you're able to claim it as, a relief against your taxes. Life assurance premium for yourself or your spouse. Unfortunately, it doesn't extend to your parents. So if you do for your parents, it's not claimable. But if you do for yourself and you do for your spouse, either of you can claim it. Then interest on owner-occupied residential loans. So if you take out a loan to build a house that you would stay in, not to build a complex, not to build an Airbnb that you want to rent out, to build a house that you would live in, you can claim it. So now, where we're moving to, right, when it comes to taxes, people have to sit down. Husband and wife, you guys have to sit down. Can I claim all these under my, what's it called? Under my with my employment? Is my income large enough to accommodate some of these things? Maybe I should claim rent relief. You're earning significantly higher than myself. We have interest, we have interest that we're paying to the bank for our house. Then another person will claim it. Or I can claim life assurance. You claim, interest on owner-occupied residential loan. So you need to do tax planning. That's the long and short of it, because a lot of people have these things and they're just leaving it on the table, even though it's claimable. Even some of these things have even been claimable way before this new NTA. So these are things that we just need to put in mind and, just take advantage of. And to take advantage of this, all you just need to do is bring an evidence that you are paying this and give it to your HR. Inform them you want to claim it. That's it. And the onus is on them to, put it in, what's it called, in the payroll and, calculate it for you. Or if you are a business person, you can actually also claim it. Then another thing to note is for life assurance premium, life assurance paid in 2025 is claimable in 2026. So you can't claim life assurance paid in 2026 in 2026. You claim prior years life assurance in current year. So please put that in mind. All right. Yeah, so we have the new tax band. On my left, we have the old band under the Personal Income Tax Act that ran from 300,000 to 3.2 million. And then we have the new band under the NTA. So one thing to note is that these are annual figures. So if you're going to use to calculate your monthly allowance, then you have to prorate it by 12 to know what will be taxable at 0%, what will be taxable as 15%, right? If you have your 3 months income that you want to calculate, then you have to prorate it by 3/12. Yeah, like that. So so ETR, that's effective tax rate. That's like on an average, how much taxes, what's the highest tax I can pay as a Nigerian? So that's the meaning of ETR, right? Prior to that was 19.2, but now the highest tax you can pay as a Nigerian citizen is 25%. So I just want us to look at this, right? So okay, so let's do, I'm going to bring up my phone for this. So say someone earns let's say someone earns like, let me just give a median salary. Let's say like 800,000, right, per month. So 800,000 divided by 12, multiplied by 12. So that's 9.6 million. So the person earns 9.6 million per year. So this is how the taxes goes. This is how the tax goes. The first 800,000 from 9.6 is going to be at 0%. So you're not paying taxes on 800,000. So let's say this 9.6 million, we've deducted pension, we've deducted life assurance, NHIS, NHF, and all those reliefs, right? So let's say we have 9.2 million, which is 9.6 million, which is your taxable income. So 9.6 less 800,000. We have what? Okay, so we have 808 million, 8.8 million, sorry. So what we'll do is we're going to tax 2.2 million at 15%. So we've taxed 2.2 million at 15%. So we take our 8.8 that remained. So less 2.2 million, right? We have 6.6 million remaining for taxes. So now this 6.6 million, the next tax band is 9 million at 18%. Our remaining 6.6 million is not up to 9 million. So we're going to tax the remaining 6.6 million at 18%. Your income like that is not going to suffer tax at 21%. It's not going to suffer at 23%. It's not going to suffer at 25% because you don't earn enough to get to those tax bands. So looking at this 25%, because I know that's part of what people are looking at, the taxes has gone up, blah, 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 blah. A large percentage of Nigerians don't earn enough to reach those tax bands. And the people that earn enough to reach those tax bands, yeah, their taxes are going to be significantly higher, right? But most Nigerians come January 2026 actually going to see a reduction in their taxes because this new tax rate is progressive, meaning that the lower you earn, the lower taxes you pay. The higher you earn, the higher taxes you pay. So please let's calm down. It's not that bad, to be sincere. It's not. Okay, so we have some penalties that were brought into play. We have if you are a company and you're doing business with someone that is not registered, someone that does not have a TIN, you're going to pay 5 million per infraction. So if you do 3 businesses with them, 3 different contracts with them, that's 15 million. So this is to reduce the the number of people that are not registered in Nigeria. So it's to reduce it. If you are not registered for taxes, 50 million for the first month, 25 million for subsequent months. So please go register for your tax identification number. If you are in Nigeria and you earn an income, you should have a tax identification number because that's how you pay your taxes. So please do that. Some people might have really, maybe your company registered for you. So you just reach out and confirm if you have. If you have, don't double register. If you do not have, please register for your taxes. If you failure to deduct taxes, that's 40% of the amount not deducted, and missed penalties, etc. So there are sometimes that you have to file, say, by 25th, but because of something, the tax authority decides to give an extension. If you miss the extension, your penalty will start counting from the original deadline, not from the extension. So yeah, please let's take note. All right, so we're done with individuals. We are now on business taxes. So I'm going to explain something here, and I got a question on Sunday, and I feel this would cover it. So we have pretty much 4 different types of companies, right? We have small companies, we have small businesses, we have large companies, we have non-resident companies or NRCs. Now, small companies are companies registered as LTD, so they can be companies registered as LTD, PLCs, amongst that. They are not business names, they are companies. They were registered as LTDs, right? So if you have turnover, so turnover means sales revenue in easy terms. If you have a turnover lower or equal to 50 million, you are not going to pay company income tax. So they will check your turnover. They will also check your fixed assets, right? If you have assets that is less than 250 million, you are a small company and you will not pay taxes. So this is where I want to talk about withholding taxes. Now, withholding taxes is a future payment of company income tax, right? Meaning that, or not even just company income tax, of company income tax or personal income tax is a future payment of that. So meaning that if you do a business with someone and they withhold withholding tax from your money, at the end of the day, when you want to pay company income taxes, you've calculated it. Say they withheld, the total amount different companies withheld was 10 million, right? And your profit before taxes is, or your tax is 30 million. You are going to deduct the 10 million that people have withheld from your money. You're going to deduct it from your final tax, and you're going to pay the balance. So it's a future deduction of tax. Now, having this understanding, small companies who are not supposed to pay company income taxes are also not supposed to have withholding taxes withheld from their money, because it's a future payment of company income taxes when it comes to them. I hope that's clear. So if you're a small company, they are not supposed to withhold from your money. That's the summary of that. Now, for small businesses, right? These are companies registered as business names, or you get, they are the Polar Blinks, the Ola Shades. They are the small businesses. They're registered as business names. Now, companies registered as business names, they are not limited liabilities, meaning that you cannot separate the business from the owner. The owner is the business. As such, they are not going to pay company income taxes. They are taxed as an individual, so they are also going to pay personal income taxes. So now, if you're a content creator, right? And they pay you your money, and then they deduct withholding tax from your money. You are supposed to, at the end of the year, you're supposed to calculate everything you earned during the year, deduct your expenses, get your profit before taxes, run it through this tax band, right? Get your tax payable, deduct the withholding taxes that they withheld from you, and pay the balance to your state board of internal revenue. Why am I confused? Yeah. So if you are based in Lagos State, you pay to LIRS. If you're based in Ogun State, you pay to OGIRS. So if you are running the business, say you're running the business in Ogun State, but you're resident in Lagos, you're paying to Lagos. So you're supposed to pay it to the state that you are resident. I hope that clears that. All right. So for large companies, these are companies who have sales revenue higher than 50 million, and they're taxed at 30%. Yeah. So they are companies incorporated in Nigeria. Yeah. Then we have the NRI, the NRCs, the non-resident companies. These are companies that are not incorporated in Nigeria, but they have permanent establishments, meaning maybe they have a business, a building where they carry out their business, or they have significant economic presence. So ways in which you have SCPs, if you say you're an online business and your company ends with .ng, you're paying taxes to Nigeria. You are based in, say, Canada, right? You have an online store where you sell clothes, and then people can filter your, what's it called, your website, and shop in Naira. They can change the currency from USD to Naira, from pounds to Naira. Yeah, you have SCP in Nigeria, you're going to pay taxes in Nigeria. So that's amongst other things, right? So yeah, you can just read up on it to understand other things. All right, so for businesses, prior to now, to know if an expense is claimable, so how I explained before that you have your revenue, you deduct your expenses, right? And then you get your profits, which will now be subjected to taxes. Now, the expense part. Under the previous law, you had to meet 4 tests. Was he only used to carry out the business? Is it reasonable? Was he incurred exclusively for the business? And was he a necessary expense? But now, the R and the N has been removed. It just has to meet if it's only used in carry out the business, and if it is it was exclusively used for the business. So some things changed. Research and development expenses. Now you can deduct up to 5% of your sales, as R&D. So if 5% of your sales for the year is 25 million and your R&D expense is 24 million, it's lower than 5% of your sales. So you can claim the full amount as an expense. So previously it was 10% of profit, but they found out that some people have revenue, but they don't necessarily they don't necessarily make a profit at the end of the year. So just to ensure that even people making losses can also claim these expenses, which really can turn it into a profit-making company, right? So donations, now it includes donations that are capital in nature. So if you donate, say, a toilet, that, yeah, you can claim it. Forex expenses, that's foreign exchange expenses. So what this introduced was that if while doing your business, you incur some expenses that were you went to the black market, you got your dollars, you used it to buy something. When you are keeping your books, you have to use the official CBN rates. So this is a down point because most of the time banks don't sell dollars to people. You have to go to malams and abokis to get your dollars. So the CBN rate would always be lower, but yeah, it is what it is. Pre-operational expenses for people that just coming into business. Pre-operational expenses like setting up costs, claim the amount you paid your lawyer to register your business, and all that. You can deduct it as an expenses for 6 years and less, right? Capital allowance, this is for my tax people. There's no more initial allowance, it's been taken out. Now it's just straight line basis, right? 10% for buildings, 20% for plants and machineries, and 25% for motor vehicles. So yeah. So prior to now, large amounts paid to directors, to senior executives, a part of it was not claimable and expenses, but that caveat has been taken out. You can now claim everything. And inventory losses, you can now carry that. Pretty much losses in general, you can now carry it forward indefinitely. So that's that. Then for capital allowance, right? You can also only claim capital allowance on assets that you paid VAT on. So this part is really for my tax people. Then minimum taxes, this minimum tax at 15% is not for everybody. It's just for multinational companies. I mean, really large companies that make revenue up to 750 million euros. So yeah, that's for them. All right, so just yeah, so other things we've spoken on the forex, we've spoken on input tax for what's it called, capital allowance, VAT payment. Yeah, we've spoken that on that. We've spoken on chargeable gains. Now, share disposal, it's you can now so share disposal is not taxable up to 150 million for companies. Now you need to get accredited tax agents to calculate and file your taxes for you. This is for companies actually. If you have a business, right? And if you have a business and you've gone through the NTA and you found ways in which you can reduce your tax exposure, legal ways in which you can reduce your tax exposure, you are now mandated by law to disclose it to the Revenue Authority. Yeah, do with that what you wish. So FRS now named the Nigerian Revenue Service. We mentioned that, and the tax on board. Please that's a very important one. Okay, so prior to now, when calculating your what's it called, your taxes, there are other levies that you have to deduct. We have the tertiary education tax, we have the Nigerian Police Trust Fund, the Naseni, amongst others. Now they've been removed. You just have to pay 4% on development levy. So I guess I'll have to drop this on, I don't know, maybe the chat box, something. The exempt, okay, so there are something we call exempted items, right? When it comes to value-added taxes. And there's something we call zero-rated, what's it called? Items. The difference is input tax, claimable, if you can claim input tax or not. So the list of things that if you do, if that's the business you're in, you don't have to pay value-added taxes. So like locally manufactured sanitary pads, we have good purchased for humanitarian or donor-funded projects, amongst that. So you don't pay taxes on that. Then zero-rated basic food items, if you sell pepper, all those things, you don't pay taxes. Medical and pharmaceutical products, you don't pay taxes on that. Livestock, goats, sheep, yeah, amongst others, you do not pay taxes on that. Also, if you are into LM, the making of electric vehicles, making the assembly of electric vehicles, you also do not pay VAT on that. So, yeah. All right, so just as I explained prior to now, the onus is on us really to, if you have a business, run it through the new tax law, see what your taxes come up to. Plan for the new year, plan ahead. Look out for, reliefs you can take and, make necessary provisions. If you have to provide documents to your company, do so. Engage a professional if you're confused. Let them help you make sense of, your books and what you're supposed to do. Just stay ahead of the change. And every relief that is what's it called, that you can claim, please, there's no limit. Claim everything. It's at your disposal. Okay, so that's it. That's my presentation. So I guess we're going to move to question and answer. All right.
Thank you so much. Really appreciate your time. You have been very, I mean, you brought it down to our local context. It's no longer as at least as far as I'm concerned, it's no longer as abstract as it initially was, right? So thank you so much for that. So a couple questions that were asked. So I'm just going to try to read them to you,
Yeah.
so that you don't have to, sift through it yourself. So someone had asked, Lillian had asked for you to throw more light on the claimable relief, right? What
Okay.
about people whose rents are 500,000 and below? How is the tax calculated?
Okay. So for claimable reliefs, if your rent is 500,000 and below, you're going to claim 20% of 500,000 as your rent relief. It's what it is. It's not a lot, to be sincere. And even sincerely, even those claiming the full 500,000, right? The 500,000 is an annual figure. So when you claim it
Yeah.
immediately and you divide it by 12, yeah. So the main relief comes from the first 800,000, that's now tax free. So how do you claim it? If you are in paid employment, you provide your rent receipt to your HR. They would have to put it to your payroll and ensure that you claim it. But if you're not in paid employment, when you're calculating your taxes, then you bring it in yourself.
Okay.
Or you give
Amazing.
your
Thank you.
consultant if you have one. Yeah.
Okay. Amazing. Quick one. So another one is there's a convention around how that your NI number is now your new tax ID. Is that correct?
Okay. So when it comes to that, so where the government is coming from, sincerely, is that prior to now, if you're in Lagos, you have PID, starts with N hyphen something something. If you are in Ogun State, you have your TIN. If you are in River State, you have one that starts with RIV. If you are in another, so we need something that is uniform, right? So your NIN serves as your uniform tax ID. However, when you're paying your taxes for your state, you still need to register with your state. So it's,
Oh, so
yes,
regardless of the NI conversation, you still have to,
you
for we in
still
Lagos,
have,
still have to go to
yeah.
LRIS
You
and
don't
get
have to go to
registered.
LIRS actually.
Okay.
Just go to the e-tax portal, click on create
Is
tax
there,
ID.
do
It's
you have
very
do you have
easy.
the website you can share with
Yeah, so
us?
I can drop it on after
Oh,
this, I can
awesome.
drop it on the group. Yeah. So just
Awesome.
go there.
Okay.
5 minutes, you are done. It's a
Oh,
very,
amazing.
yes, a very
So,
straight.
and can you do that without having necessarily, without you necessarily having your FRIS, the federal one,
Yes,
the
yes, yes. You
Oh,
can do
okay,
that.
great. Oh,
Yes.
amazing. All right, thank you for that. Then another
Yes.
another question is, I mean, I was wondering who even asked this. So now, I heard that there's a classification between small businesses who produce physical product and businesses who render service as a product, right? That if you
Mhm.
render service as a product, the company income tax still applies to you at 30%. And then if you have physical product, you're a manufacturing company and whatnot, then the 50 million cap applies to you. Does that,
Mm.
I'm asking. So yes.
Okay, so it depends on how you're registered actually.
Okay.
So, for example, now let me use Deloitte as an example, right? We have partners. We render services. We have partners. So the partners are the business owners, and regardless of how big the company is, they are taxed as individuals. So the profit is shared and they are taxed as
As
individuals.
Deloitte, or as
Yes,
individuals,
as individuals.
not so that's multiple individuals, but and not Deloitte.
Exactly.
Okay.
So it depends on how, how the business is structured. If you are a company, if you're a company, if you are if you're a partnership and all that. So,
Okay, so
no,
let me ask
okay.
this in a more direct manner now. So say I am a software developer who picks up
Mhm,
contracts here and there, and I am registered as a company, right? I
mhm.
get contracts here, I get contracts there.
Yes.
Does the 50 million cap still apply to me? Or
Yes, it
because,
does.
oh, it still applies to
If
me?
you are a company,
Yes,
if you
that
register as
is
a company,
limited. Ologbonjai Gabriel and Sons Limited.
yes. But the issue now is when it comes to tech, right? There are some exemptions for them because they are it's a sector that the government is trying to,
Understand.
yeah, to encourage people to
Okay.
join, to do all these things. So yeah, so really, to be sincere, right, a lot of these things is very business or individual specific. So
Okay.
you need to know what applies to your particular to your particular business.
Amazing. Okay. Another question here is because I think you've already answered the how do you claim it? Claim that
Yeah.
so we can skip that. So another question here is who are those to enforce the penalty against against defaulters?
So it's the revenue authority.
Revenue authorities.
And
Yeah.
believe me, they actually do. Guy.
That sounds like a
Actually do.
threat.
No, it's not a threat though. It's
Okay.
actually not a threat because prior to now, right?
Yeah.
So the thing, really is that, okay, so prior to now, they go after big companies. So
Mm.
they do this cost benefit analysis where the penalty we're chasing you for is 50,000.
Yeah.
The number of people we need to write letter, approve, their 1 hour is more than 50,000. So they'll most likely just leave you alone, like, you know what? Let's go after people that their penalty is like 200 million. That's
Yeah.
we go after them like this. But because they also have budgets, they
Yeah.
actually have very strict monthly budgets amount that they're
Mm.
supposed to bring in, right?
Yeah, okay.
So they'd rather spend their time on that and now. But there's something going around in grapevine, right? That the Revenue Authority has now employed very savvy people, and they have comp guy, they have computers, they have gadgets. So it can get a bit
Mm.
um you know worse, right?
Yeah.
Yeah, in the new year
Okay.
it might be more stringent come
Okay.
new year, but
All right.
yeah,
Another
that's
question very quickly is as a small business with earnings less than 100 million, you are VAT exempt, right?
that's correct.
But
Yes,
you
that's
need
correct.
to pay personal income tax
Yes, that's correct.
as the owner of the business, not
That
as the
is
business.
as the
Okay,
owner.
okay, no, no, that is when you are a business name, not a
Yes,
company.
not a
Okay, okay,
company.
okay, okay.
Yes, yes.
Then another question is, I didn't quite get the calculations for personal income tax. That is the green table, because I think it was something that also helped me too. But yes, please go ahead. The green
Mm,
table.
okay, so let me just explain this, right? If you can just try and visualize it. So you earn, let's say annually you earn 20 million, right? You have okay, you know what? I think what I'm just going to do is I'm going to open an Excel file. I'm going
Mm.
to put the okay, I'm just going to do it. So we'll just take 5 minutes to just do this so we have
Okay.
a better understanding of it.
So while you're doing that,
All right.
pull up other questions. One here says, yeah, Alemu asks that, what can we say about narrations being used during transactions?
Okay, so yeah, so this has been going around that the government is going to tax what's in your bank account. The government is not going to tax what's in your bank account. If the government removes withholding tax from your bank account, the government has always been removing withholding tax from your bank account. You've just not been paying attention to it.
Oh, no,
If
yeah.
you have an investment, say your savings account, your bank gave you 50K interest at the end of the month. They've always done that. So those are the things they're going to do. But now, where if we take it a step further, right? If you have so you have a business name, you run a business, right? You use your account, your personal account as your business account, which
Okay.
is wrong. You're not supposed to do that. You're supposed to have a business account
Account.
so that if the government comes for you, you can give them the business account. You're not supposed to mix the two together. But let's say you do that, right? And then 50 million comes in today, 20 million comes in tomorrow. Okay, so 50 million already puts you above, right? So let's say
Yeah.
5 million comes in today, 2 million comes in tomorrow, maybe 5 million from your father, Merry Christmas, 2 million from your brother, Merry Christmas, and all that. And let's put in mind that the bank actually has some things they need to file with the government every month.
Okay.
So that's by the way. Then you pay your taxes and then you are paying 200,000 in a year. And then maybe uh, CNN invites you, they do an expose on you, the fashion designer from Nigeria, or channels invited you, the something something from this, and then they are seeing you in big places and you're paying 200,000. They are going to ask for your account because they believe you are not declaring everything you're supposed to declare. They believe that for you to get to that point, you are earning more than that. So that's where
Uh-uh.
your narration comes to
If
play,
I'm a small boy with a big God.
right? So that's where your narration comes to play. If you are mixing both together, then you need
Yeah.
to be specific. This money is for this money is for that, because they will ask for a bank statement. But
Okay.
if you have a separate account for your business, that's
Yeah.
where all the money goes to. If you are collecting any money, if you want to take out any money from Kini, you title it as maybe loan or drawings, owner drawings, or
Yeah.
no issue. They ask for
Yeah.
your bank statement, you give them your um company's accounts.
Mm-hmm.
You are fine. So you just have to put structures in place.
Sweet. Amazing.
Yeah, pretty
All
much.
right. Thank you.
Yeah.
All right. So back to your Excel sheet.
Okay, so let me just share my screen. Okay. Can you see my screen?
Yes, it's coming up.
So,
Okay. Yes.
so let's say total income, your total income for the month. We're going to have different scenarios, right? So, let's say your total income here is 9.6 million, like we
Okay.
used before. Okay. Um, then or let's say this one earns 100 million yearly, right?
From her mouth to your ears, my lord.
Ah,
No, go ahead. Please go ahead. It's fine.
okay. So uh annual amount, right? Then you have NHF, that's National Housing Fund. Let's say
Yeah.
you have NHIS, you contribute to that. Let's say you have life assurance, right? Let's say you have mortgage. Okay, so let's say you have NHF of uh let's say 50,000,
Five
because
percent. It's 5%, right?
yeah, so it's 5%, or no, not
Per month?
5%,
Is it 5%?
2.5%, 2.5%
2.5%, yes,
gross,
actually.
yeah, of gross income.
Yeah, gross income.
So let's just say it like that, right? So that's 2.5% of this. Let's do it
Yeah.
like, right? NHS, let's say that. So I'm putting it as a negative figure because it's going
Yes,
to reduce your total. Yeah.
absolutely.
So let's say NHS is 50,000, right?
Per, per,
Let's say,
per year?
yeah, let's just say.
Okay.
No, because most of the time company um
Yeah.
pays full amount. So let's just say they asked you to pay part of that.
Okay.
We need to remember pension. So let's
Absolutely.
say life assurance. Let's say you did the life assurance of 1 million, right? 10000. Let's say you have mortgage for, let's say the interest. Yeah. So just to mention, the amount you are going to claim is not the amount the full amount you're paying to the bank. You know, the amount you're paying to the bank is divided into principal, the principal you are repaying, and
Yeah.
interest you are repaying. It's the interest portion you can claim. Only the interest portion.
On the mortgage.
Yes, on the mortgage. So they're
Okay.
dropping back. Yes, so just the interest.
Okay.
So let's say 20,000, right? Because we also have to do it relative to your income.
Yeah.
And pension, basic housing transport, 8%, that's the basic, can be higher than
Yeah.
that. But let's say that's like 800,000 per month, let's just say.
Per year.
Per year, sorry, per year.
Yeah.
So what's minus
So
before?
that's why I'm saying that the 20, so because I'm trying for this to be as realistic as possible, right? The mortgage can be 20,000 per year though.
Okay, so you think we should
Uh,
do this
yeah, we're looking at
200,000?
possibly, yeah. Even
Okay.
the NHIS as well.
Mm-mm.
Probably maybe 200 as well, possibly.
Okay.
Yeah. Just so that it's
NHI, where's it?
that's
Okay,
it. The
200.
second one, the 50,000, yes.
Okay, so let's say 200. All right.
Mm-hmm.
So this is significantly higher. So let's just say what this one pays is this times 10%. That's
Yeah.
like a proportion of that. So let's say this is what they pay.
Right.
So these are your reliefs. These are your reliefs. Hmm?
Right.
So your taxable income or your chargeable income, which is that's the same thing.
Yeah.
Income,
Taxable.
yeah, is equal to income. Okay, so that's equal to this amount less this amount.
Yeah.
So since I
Absolutely.
put negative there, so I can just go ahead and do
Some more.
sum of this, right?
Yeah.
And yeah. All right, so this is your taxable income.
Yeah.
So now we are going to now do it like this. Okay, so 800,000, right?
Yeah.
Let me shift this down. So 800,000, 2.2 million
2.2. Yeah.
to I think this is
9 million.
coming plus. Okay, so that's 22.
Yeah.
2 million.
There's meant
Then
to be
this
2
is
million. Yeah.
9
The 9 million.
million. This is 13
13,
million.
25, and 15.
This is 25 million.
Yeah.
And this is 50 million.
15. Very soon.
Okay, so this
Mm-hmm.
is our tax band,
Mm-hmm.
right? This is I'm going to put this at balance.
A serious balance.
And this is tax payable. So what we're going to do now is we're going to check these two amounts. Is it higher than 800,000? It's higher than 800,000.
Yeah.
So we are going to do 800,000 at 0%.
Yeah.
Right? Okay, yeah, it should translate.
Absolutely.
Okay, so no, yeah, should okay. So at 0%, then
2.2.
balance, right? Okay, so let me do balance here and let me do balance here too. So we are now going to do equal to this guy times 8 minus 800,000. This is the
Yeah.
balance we have here. And this is the balance we have here,
Mm-hmm.
right? So we're going to check, is this higher than 2.2 million?
Yes.
So 6 is higher than 2.2, yeah. This is also higher than 2.2 million. So we'd go ahead and do equal to 2.2 times
Times
15%.
0.15. Okay, percent. Okay.
15, yeah, 0.15 actually.
Yeah.
So let's just log this, right? So it's going to be the same as this.
Yeah.
So the balance is this minus this.
Yeah.
And the balance of for this is this minus this.
Yeah.
So we'll go to the next step. Is this higher than this? It's not. 4.1 is lower than 9 million.
Yeah.
So we just do this balance multiplied by, so we are on 9 million. So
Yeah.
multiplied by 18%. So that's 0.18.
Yeah.
And that's the end of this guy's taxes. In a year, it's going to pay.
Wait. Sorry, ma. Hold on. But it's not up to 9 million now. So why are you
Yes,
taxing it?
so if it's not up to 9 million, you just tax the balance at the next.
Blood of Jesus.
That's
Eh.
yes, that's how it is.
Okay.
So we come here 72 million, right? 72 million is higher than 9 million. So here we tax 4.1 million at 18%. Here
Yeah.
we are going to tax 9 million because we can still remove 9 million from.
Yes.
So we are going to tax 9 million at 18%.
Hmm.
Then we would come and check the balance. The balance is 63 million. 63 million is higher than 13 million, right? So we are going
Hey.
to tax 13 million at 21%.
Yeah.
We have 2 points. There's okay. So
Yeah.
check the balance. The balance
Yeah.
is this 50
Yeah.
million, but we can still remove 25
And 25
million.
million.
So we
Yeah.
tax 25 million at 23%. We get this.
Hmm.
And then we do uh
Uh-huh.
50 million. Okay, 50 this less 25 million, right?
Uh-huh.
Have this balance. So now this is the last tax band.
Uh-huh.
Even if what we have here is 100 million, we'll tax the remaining balance at
My
the
Lord.
final tax band. That's at 0.25. So this guy is going to pay 1.07.
Yeah.
This is going to pay 16 million. Yeah.
Yeah.
Yes. So this
Okay.
person, yeah. That's how it is. Let me
Okay.
reduce this so you can say okay.
Tribesmen, fear not. Oh. I mean, yes, you see,
Okay,
this
so
is
yeah.
showing us where we are coming up to. Mm.
Yes,
Yes,
right.
yes.
And removing 60 million from 100
Pastor,
million
sorry.
salary.
Pastor, you said they should better fix the light and road. Please
Right.
go ahead.
Yeah, so though this is it. So if you check, right, let's see the effective tax rate for this
Mm.
guy. Uh so so technically, uh this guy is taxed at 11.24%, while this guy is taxed at 16.83%. So
Yeah.
the person that earns lower is taxed at a lower ETR at
Yeah.
the end of the day than the person that earns higher. So yeah, I hope that
Amazing.
answers.
Yeah, I think this has been very, very clear. Thank you so much for providing this context. And honestly, I think again, what this shows to us as tribesmen is the fact that we can no longer choose to remain ignorant, right, of our finances and also our context. You understand? No longer will they ask for you to come and vote, and then you sit down in your house, you say that the sun is too shiny. You understand? So please and please, the whole essence of this is so that we are educated and we are brought up to speed so that 2026 will not catch us, unawares. Please and please, yes, all the resources will be shared. Earlier, someone had shared a link on the group, on the chat box. That same link would also be shared. In fact, I also think that they made the link available the tax reform guys made a link available where you can go and check what your effective tax rate will be. All of this will be made available. The recorded session as well will be made available so that everyone is caught up to speed. And then, for subsequent conversations around this, I think that I mean, we have professionals in the house, and in fact, this is a good time to also get a consultant. All right, and then this session is already on YouTube as well. It's already on YouTube. We have our in-house consultants that you can also, get as your consultant, not unit talk. Do you understand exactly? So, thank you so much, our able tax professional. Thank you for facilitating this meeting. I want
Yeah.
to believe that we have asked all the questions that we need to ask, and I know that There are some things you still probably need to pour through. So, like I've just said, this session is already streaming on YouTube, and it's going to be available on our YouTube channel. So make sure to go through it as much as you need to go through it, so that you have all the information that you need to have. And then, again, like I said, 2026 is not a year that we should stumble into, recklessly. Let's ensure that we plan our finances and plan our taxes as well. Remember, it doesn't matter how big the tax may be. We are going to give to God bigger than we are going to give to Caesar anytime, any day, right? Yes, our bands increase. Our bands increase. Yes, that's the disposition we need to walk through. Now, I've already claimed my own 100 million per year as a starting point. So thank you for
Right.
showing my 16 million naira tax bracket. It's fine. No wahala. We will not won't fight with it. We will accept it. Yes. So thank you so much. Really do appreciate it
You.
for coming out tonight. So without any further ado, we'll be we'll be closing the meeting, and let's just pray. Let's just pray as we close the meeting. Father, we say thank you. Thank you so much for how that you have been present with us. Thank you for your provision, how that you have met our needs, according to your riches and glory. Thank you for this new regime that you're bringing us into, because we are not scared. We embrace this because we know that we are marching through. We are going to err on the side of the law, and we will even give bigger to you than we've ever given. Our bands will never shrink. We will continue to trust in you every day of our lives. You who kept the lilies of the valley, you who have fed the birds of the earth, of the air. We know that you will provide our needs according to your riches and glory. Thank you, everlasting Father, because we grow onwards and upwards even from here. In Jesus' name, we've prayed. Thank you so much, everyone, for coming out. The YouTube link is the Tribe's YouTube channel. Just head up to the YouTube channel, the Tribe's YouTube channel, and it is right there. All right. Thank you so much, Miss